So this was the status of the macroeconomy in July. Bitcoin was appreciating 55%. It was trouncing the NASDAQ and the S&P. Gold was a laggard. Silver was lame. Bonds were losers. The entire industry needs Bitcoin as their ethically sound, economically sound, technically sound foundation if they're to have any future. And I think you guys should be very, very proud of that development. 12 months, what's going on? Bitcoin is still running hard, running harder than it has been, up 61%. The Magnificent Seven and the S&P are underperforming. They're struggling. The tariff wars, the trade wars have been a challenge for them. There's been a general mainstream lagging of confidence, and that's caused a surge in gold. But Bitcoin is running much harder than gold. Real estate soldiers on, and bonds continue to fail. Bitcoin's outperforming all asset classes this decade, too.
Bitcoin is leaving everything else in the dust. While stocks remain flat, bonds are losing ground, and gold struggles to keep pace, Bitcoin is charging ahead stronger than ever. That's the latest from Michael Saylor, Executive Chairman of Strategy. In its early years, Bitcoin was dismissed as a novelty, criticized for its volatility, and largely ignored by traditional finance. But over time, it has consistently outperformed every major asset class. Unlike central banks that rely on printing money and market interventions, Bitcoin runs on a fixed supply and decentralized trust. Drawing on over a decade of data, Michael Saylor argues that Bitcoin hasn't just outpaced gold and equities, it has done so through economic booms, busts, and even a global pandemic. He sees this not as speculation, but as a clear signal that lasting value is shifting away from traditional fiat systems. Stick around until the end of the video to hear why Saylor believes Bitcoin is the top-performing asset of the decade, and why investors who ignore it risk being left behind.
For those of you who were in Nashville last July, I presented a few slides, and I want to take you back 11 months. So this was the status of the macroeconomy in July. Bitcoin was appreciating 55%. It was trouncing the NASDAQ and the S&P. Gold was a laggard. Silver was lame. Bonds were losers. Bitcoin was $1 trillion asset class. It was just less than 0.1% of the wealth in the world. But we could see that something was going to change. I presented a forecast in July, and I said, I really think my base case is Bitcoin's going to grow 29% a year for the next 21 years. And that's going to cause it to appreciate to $13 million Bitcoin. We had a macro forecast, and that meant that Bitcoin was growing to be 7% of all global assets. And it was growing to be its own asset class. And you can see here, $280 trillion, but the preeminent monetary asset in the world. So all of that was last July. Bitcoin was $65,000. What happened since? 11 months. Okay, this is extraordinary. I was, as Joe said, I was bullish last July. I've always been bullish, but when Bitcoin dipped to $16,000 during crypto winter, I was bullish. But stuff that's happened in the past 11 months has been extraordinary. The White House has embraced Bitcoin. This is an extraordinary development. We didn't anticipate this. We hoped that we would get a favorable administration, and we hope we get support, and we had this inkling, but November 5th brought a sea change in politics, and although we thought we might have a pro-Bitcoin president, we didn't think we'd get a strategic Bitcoin reserve. We didn't think that the president would say, America will be the Bitcoin superpower of the world. This is an amazing development. The new administration, J.D. Vance, pro-Bitcoin, Robert F. Kennedy, pro-Bitcoin, Tulsi Gabbard, pro-Bitcoin, Kelly Loeffler, pro-Bitcoin, Paul Atkins, pro-Bitcoin, Brian Kentez, pro-Bitcoin, Scott Bessent, pro-Bitcoin, David Sachs, a new position, cabinet-level position, not just pro-Bitcoin, a cabinet member that would go on television and say Bitcoin is the one decentralized crypto network in the world. It is special. It is the digital commodity, right? The one thing that we've all known, but a cabinet member in the United States government says it. He said it in March of this year. Howard Lutnick, pro-Bitcoin. Kash Patel, pro-Bitcoin. Every one of these cabinet members flipped from 12 months earlier, where there would have been no one that would have been as bullish on Bitcoin as what we saw here. Wall Street embraced Bitcoin. $150 billion of capital, 1.4 million Bitcoin. This entire dynamic started in January of last year, but it accelerated after July. Public companies. My company was the first public company to adopt Bitcoin. People thought we were crazy. I thought we were late. Like some of you, I kept thinking that I got it right in 2013. Like, why didn't I buy in 2013? In 2020, I thought I was late. But what happened next is the second company, the third, then 130. Then companies like Trump Media and GameStop in 21. And now companies are racing to get into the Bitcoin 100. Used to be, we thought, oh, it'd be great. There's 10 Bitcoin companies and 20. Now there's 100. Now there's more than 100. Now we're all going to compete to move up the leaderboard. Yeah, let the games begin. Bitcoin wasn't an institutional asset. It wasn't cool on Wall Street. People thought it might be toxic. Well, now I have a whole set of equity analysts that write research and publish their research to investors, and they put a price target on Bitcoin. So now you have the entire equity capital markets embracing the asset class, writing about it, opining on it. You know, we went from an oddity, tulip bulbs maybe going away, to an entire array of analysts and investment banks starting to have an opinion. And of course, if you look at all the prices up there, their opinion is all positive, it's all bullish. Technology investors have embraced Bitcoin. What you see there is the Bank of America investment analyst equating Bitcoin to something as profound as the light bulb, the Model T, the World Wide Web. Right? That's a very important rotation. Bitcoin is a technology. Bitcoin's not a speculation. Bitcoin is not an oddity. Bitcoin is not anarchy. Bitcoin is just the next great technology.
In less than a year, Bitcoin has moved from the fringes of finance to the heart of capital market. It has attracted over $200 billion through newly launched ETFs, earned recognition from major firms like BlackRock and Fidelity, and sparked interest from governments considering it as a strategic reserve asset. Wall Street analysts have moved beyond questioning Bitcoin's legitimacy. Their focus now is on determining how much exposure they need, with 3 to 5% becoming a common benchmark in institutional portfolios. Technologically, Bitcoin is being seen as foundational infrastructure, much like the early internet. What started as a decentralized experiment is now evolving into a global financial pillar, valued not only for its returns but for its growing relevance.
Financial regulators embrace Bitcoin. This you never believe. The head of the OCC says banks they should support Bitcoin. The Fed says it's okay for banks. They should get on and start supporting Bitcoin. The accountants say you need to provide fair accounting for Bitcoin. The SEC says it's okay to create ETFs of Bitcoin. This is an amazing development. Capitol Hill embraced Bitcoin. The House, the Senate, the Cabinet, you've got 3 bills, the Clarity Act, the Genius Act, the Bitcoin Act, all moving through Congress right now. This is something nobody guessed, no one conceived of a year ago. States in the United States are embracing Bitcoin. Governors, right? There's legislation working its way through state legislative branches everywhere. You know, Bitcoin is money for everybody. Bitcoin is for everybody, and everybody is getting interested in it. International governments embrace Bitcoin. Spokespeople for the UK, for Ireland, for Pakistan, for Bhutan, for El Salvador, for Russia, in China, in Hong Kong, in Europe, everywhere, right? They all have an opinion. Their opinion is this is very important. This is an extraordinary movement. The crypto industry has embraced Bitcoin. And this is extraordinary. You should all give yourself a hand because you've won. These are all public statements from the last 12 months, and let me tell you how I interpret this. This is everybody in the crypto ecosystem acknowledging that Bitcoin is the foundation of the crypto economy. Bitcoin is the reserve currency of the crypto economy. Bitcoin is the one central, certain, unshakable protocol and the fulcrum, the focal point of the entire industry. Everything else is built on top of it. There's been an unprecedented coalition that's come together in support of Bitcoin, and I think a realization that the entire industry needs Bitcoin as their ethically sound, economically sound, technically sound foundation if they're to have any future. And I think you guys should be very, very proud of that development. 12 months, what's going on? Bitcoin is still running harder than it has been, up 61%. The Magnificent Seven and the S&P are underperforming. They're struggling. The tariff wars, the trade wars have been a challenge for them. There's been a general mainstream lagging of confidence, and that's caused a surge in gold. But Bitcoin is running much harder than gold. Real estate soldiers on, and bonds continue to fail. Bitcoin's outperforming all asset classes this decade too. So it continues with what you would expect, 56% on average ARR for the past nearly 5 years. More than double the Mag 7. That's more than about double the S&P. You've got gold, a little bit of a surge starting to catch up, but gold's still underperforming the S&P, and real estate less. This is an important chart. Here's what this chart is telling you. The cost of equity is 13%. That means that if a company's capitalized on gold, real estate, bonds, soybeans, oil, any other commodity, it can't beat the cost of equity. You cannot sell equity to buy real estate. It's dilutive. There is only one asset that a company in the world can hold that you can capitalize on that is higher than the cost of equity, and that is Bitcoin. And so you see the explosion in Bitcoin treasury companies is because now that the world's recognized a digital commodity, they also recognize it beats the cost of equity. That means that every public company, in theory, should recapitalize on Bitcoin, because when they sell equity, they're actually generating profits. They're creating an accretive transaction for their shareholders, right? The world is waking up to this. You see that hence you see an explosion, in the shares of Metaplanet and SmarterWeb and H100 and Blockchain Group, right? This is going to continue. These companies are going to catch fire everywhere in the world, in every capital market, for one simple reason. Investors can see that 56% is more than 13%. It's just that simple. And it's a very powerful dynamic. And yet Bitcoin is just 20 basis points of global wealth. So here's an interesting thing. We are now at an inflection point. We have all the information to know Bitcoin is winning, and yet the majority, 99.8% of the capital in the world, still pretends and acts like it isn't. Most is still oblivious. You know something the rest of the world has not yet acknowledged, and yet it couldn't be clearer to all of us in this room. There's a monetary revolution afoot, a revolution in economic thinking. It's spreading everywhere in the world. It's fueled by the digital transformation of the capital markets that you see manifested in all of these companies and all of these securities and all of this Bitcoin activity. And it's going to be accelerated by explosive financial innovation. That innovation is surging now.
In other news, institutional demand for Bitcoin is accelerating as global markets shift into risk-on mode and political tensions appear to ease, at least for now. Investor confidence has returned across multiple sectors, with the Nasdaq 100 hitting fresh record highs, oil prices rebounding to pre-conflict levels, and Coinbase soaring 12%. Driving these positive moves are two major regulatory developments. The U.S. Congress passed the Genius Act, providing much-needed compliance clarity for stablecoins. Meanwhile, Coinbase became the first American exchange to secure licensing under the EU's Markets in Crypto Assets framework through Luxembourg. This license allows Coinbase to legally operate across all 27 EU member states under a unified set of crypto regulations, a significant milestone for both the company and the crypto industry as a whole. Meanwhile, the number of companies holding Bitcoin as a treasury asset has nearly doubled this month, rising to over 240 firms with a combined total of 3.45 million Bitcoins on their books. If this trend continues, Bitcoin could soon surpass gold as the preferred hedge in today's volatile economic landscape. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.